close his fucking door.
Yeah. Jamming at the mic like a trigger with a finger itch. Whole damn marker hanging off a single fucking center switch. Glasses glint, execution in his iris flick. Every pause feel like a loaded gun click. Red tie strangling liquidity circulation. Breath control dictating global valuation. Dot plot scatter looking like a ritual summation. Every dot a body chalked in asset allocation. Say one syllable, boom. Pensions getting vaporized. Blink half a second wrong. Whole sectors euthanized. Liquidity dry, then he flooded like a tidal shift. Same man either kill you or print you a fucking lift. Nasdaq twitching like it caught a seizure fit. Doves whisper mercy. Hawks screaming bleed the bitch. Every continent a catalyst. Ignition spark, either light the fuse or bury you in the dark. Breath hitch, whole world locking in place. Trillions on the line hanging off his face. One valve tilt, now your whole account in the race. Or you riding rockets laughing straight into space.
Finger on the switch, don't slip. Green or red, same devil on the script. Heartbeat sing to the live stream drip. Everybody pray, he don't say wild shit. Yeah, say, fucking say it now. Rip us to the sky or burn it to the ground. Print that money, flood the whole damn town. Or kill the lights, let the red rain drown. Say, fucking see out. Cause a great, what's it about? One man talk, that's the route to a Lambo. Or wipe the counts.
Suit clean pressed, but the aura straight demonic. Voice calm, but the impact catastrophic. Mic check, echo sound like war hydraulics. Fun stampede, panic algorithmic S&P. Gas spin like it underwater lock. Options chain twisted in a fucking shot. Gamma squealing, tires skidding off the block. Every hedge fund praying he don't drop the wrong talk. Data dependent, yeah, that shit a coded curse. Marker read between the lines and make it worse. Forward guidance cutting deep like a surgeon's thirst. Either stitch you up or put you in a hearse. Screens flash white, portfolios glitching out. Traders losing years of life in a minute bout. He cleared throat, that's the reaper shout, not a cough. Whole system taken out, no drums, just heartbeats pounding ribs. Grown men begging jobless, claims to live. One man, one mic, one chair, one script. Whole damn planet hanging on his lips.
Say, fucking say it now. Rip us to the sky or burn it to the ground. Print that money, flood the whole damn town. Or kill the lights, let the red rain drown. Say, fucking say it out. Knows the way, what's it about? One man talk, that's the route to a Lambo. Or wipe the counts.
This is it. This is it.
Green candles pierce through the stratosphere ceiling. Shorts get incinerated, no trace, no feeling. Moon ain't a meme. That's a policy decision, rate cut, whisper. Turned illusion to precision, oh. Red screens, hemorrhage, arteries blown. Margin call, sirens go straight to the bone. Group chats, ghost, dead silence on phones. One man voice just collapse every zone. Same suit, same stare, same code as delivery. But the outcome swing like a violent epiphany. Either print you a bag or erase your identity from a single word drop with God's here authority.
Say, fucking say it now. Rip us to the sky or burn it to the ground. Print that money, flood the whole damn town. Or kill the lights, let the red rain drown. Say it, fucking say it out. Cause a grave, what's it about? One man talk, that's the route to a Lambo. Or wipe the counts.
Oh, brother, oh, brother, oh, brother. Welcome back to another specialty episode of the Matt Kohrs Show. Obviously, my apologies for this morning show. Even though we were over on time, it was a rude way to leave you, but I had one of the weirdest tech issues ever where not only did my computer completely 100% crash, all the screens went black. It took a lot of effort to actually figure it out, like a lot of effort to figure out what in the world was going on. I had to unplug my RAM sticks and put them back in, and I did that after disconnecting, reconnecting, cycling the power, this, that, the other thing. But obviously, a shout out to the Goonie Trading Discord for helping me with that craziness, because it was exactly that, pretty freaking crazy. So I also learned that I very much need to clean out the inside of my computer. There's a lot of dust. It is disgusting. So that's something I got to put on my to-do list after, ideally, we make some good money trading, but also making some bets, which is actually why I started it a little bit early today, because I want to do something a little bit fun with y'all. Folks, we've done it before. We're going to do it again. Let me switch this up here. What will Powell say during his March press conference? So I've noticed that a lot of the times, like, you could say yes or no to saying a certain word, and then obviously the chances, and certain things are just not worth it, like 99% chance, like who cares about that? By the time you get into the 80s, maybe it's a little bit interesting of like, okay, pretty high odd chance he says AI, but maybe not. But anyway, after doing this a couple times with all of you, we've realized that most of the time, he really doesn't say these words, almost as if he sees the words beforehand. And he's like, I'm just not going to say them. So I thought, here's what we could do, is we could just go down the list and say no to a bunch of them, because he just tends to not say these freaking words for whatever reason. Dollars. So should I just bet $50? So here's what we're going to do. Review, submit. Oh, okay. They made that like really easy. Review. So let's take a lot of these, and then I'm going to turn it over to you for some of the yeses that maybe, balance sheet. He loves to say balance sheet. I don't think he's going to say Iran. Will he say Iran? Won't he say Iran? I feel like we could go bigger on not saying Iran. Will he say Iran? Chat, what do you think? Will Powell say the word Iran during the press conference? I think he'll either say it a gazillion times or not say it at all. Like, is this going to be one of those things where before we were betting on pandemic and like seemingly he just didn't want to say it no matter? I don't think he's going to say it. I don't. Well, he might. Yeah, he might. Or he might not say it at all. Boom. 250. He's not saying the word Iran. Shut down tariff, and he's not saying central bank. I can tell you that. I actually can't definitively tell you that. I'm just vibing it. Tariff inflation, we'll throw 50 on a no there. Shut down, we'll throw a 50. Like, we've learned from this shit. He just doesn't say these things. All right, let's get into the interesting ones here. Dollar, probability, replace volatility, beige book. Well, we'll take the 50. We'll do the 50 on volatility. We'll do the 50 on beige book. We're taking no's across the board, folks. President? Fuck knows he's not saying president. We'll do 250 on that bad mamma jamma. Recession, dot plot, tax, dissent. He never says dissent. Let's throw 100 on dissent. Let's throw, dude, they always try to ask him about that shit. And he just like refuses to start. Pardon. That's an easy two. He's not going to say the fucking word pardon. If I'm wrong, though, those are horrible odds. Ew, maybe I should have thought about that. All right. We took a lot of no's. We took a lot of no's because just going through this shit with you guys in the past, he really does not say a lot of these. Are there any particular ones you want to say yes to? Like oil? Oil is a strong yes. AI, we could throw 50 on oil, even though the payoff's not good. It's still, hey, a win to win. AI feels like it's still a good one. We'll throw 50 on AI. So we took two yeses, oil and AI. I like those. But the rest of them, dude, the guy just doesn't talk. He just says no. Say yes to beige book. He said it in the last three. Okay, but the odds are real. Okay, well, you know what? We'll take a long shot one. We'll throw 50 on it. That's a good payout. Beige book, or we'll throw it in there. You said he said it in the last three. You know, that'll be our one reach one. That'll be our solid reach. We're taking low odds on that with a nice paycheck if we happen to get it right. So obviously I'm doing this all on call sheet. It ends in 6 minutes. So technically the speech is at 2:30, just to be really, really clear here. But they turn the markets off at 2 p.m. just because they have a pre-written release that goes out and it kind of gives you an idea. So regardless, all you need to know is it ends in 6 minutes and 21 seconds. And then from there, the money's locked in. The money is locked in. Audio and video are out of sync. Are you saying that's on my end or is that on your end? Is that like your computer issue or a my computer issue? It could be either. I'm looking at my software right now. Audio check. Testing. Nope, looks fine on my end. It could be my computer because it literally did crash earlier today. But maybe on yours, just give it a quick refresh. Matt, how are we not moving? PPI came in hotter as NFP and we have... What do you mean not move? Have you seen the market today? What do you... Not move? Are you blind? What do you mean not moving? Are we looking at the same stock market? What do you mean? We went from 674. We went down like $10 in the SPY. The Q's puked from 608 down to also $10. What do you mean not? How are we not moving? Are you blind, dude? What fucking market are you looking at that you think we're not moving today? Golly. Yeah, I don't know. Maybe instead of trading today, you should be setting up a meeting with your eye doctor. Talk to your optometrist. Not moving. Only use computer cleaner air. Use compressed air and overspun my graphics card. Oh, okay. I'll be careful. I appreciate that. That's definitely a mess up that I would have made. So, no, I have this a while ago, I bought this little specialty fan off Amazon that's like meant for vacuuming and cleaning out computers. So hopefully it works. Only a 200-point move on the NQ, Matt. No, is far more. Once again, I'm just talking to fucking blind people. We went from 25,200 to 24,800. You know, it's been a while since I had to do rudimentary math, but I'm pretty sure 400 points is quite a lot. We've had some serious movement today. We've had some serious range. It sounds more so like you're complaining that you didn't get a piece of it, but that's also on you. That's not on the market gods. The market gods did their things today. The market gods most certainly did their thing today. In the New York session, so you think it should just be moving in the session that you care about and not when the news is actually announced? Well, that's kind of weird. So your argument is that the market should only move in the session that you're trading and not when the news is actually announced. That I'm starting to fully understand what you guys are saying. If I don't think about it at all, it makes sense. You guys are right. The market should not react to the announcements. It should wait until you're paying attention to your computer. I understand what you're saying. That it's starting to make sense. I fully understand where you're going with it. You're right. I'm wrong. It should. I actually kind of like this rule. I'm on your side. The market should only move. It should only move if we're actively sitting at our computers. It makes sense. Anyway, we're about to find out in 2 minutes. So here is what's going to happen. At 2 p.m. Eastern, which is about 120 seconds away, we're going to be getting the FOMC economic report, which right here you can see FOMC calendar. This is the whole dot plot thing. You get this every other meeting. And right here, you could come to federalreserve.gov/monetary policy/FOMC calendar, or just Google FOMC calendar, and it's going to all populate right here. So you can click on it, read it. Obviously, we're going to be checking it out on the stream. So there's going to be a lot of information, but the headline thing is going to be what's happening to the interest rate, and it's going to remain unchanged. So we're currently sitting at 3.5%. It's probably going to stay at 3.5%. So that's all going to be announced at 2 p.m. And then at 2:30, that's when Jerome Powell, the chairman of the Fed, will be doing his public press conference. So it's like a big announcement, a lot of data, a little bit of a pause, and then Jerome Powell. So then another big speech. So that's the whole 2 p.m. versus 2:30. Hopefully in the meantime, our boy Rick Santilli is working today. I'm hoping they bring this guy in. Come on. Where are you, Rick? Where are you, Rick? All right, we're 60 seconds out, folks. 60 seconds out. All right.
Spike in oil.
Let's get that ready.
What is this? When does this? Where's the tipping point? Does this tip from an inflation shock into a growth shock? I want to hear what the Fed has to say about that. So I'm going to be really focused
here's
on what
its
their growth
independent
numbers are
Fed.
and how
All
they're
right, so we're
actually
not missing
interpreting
that. We're
this.
ready
Sarah,
here.
the
We know
risks
they're
out
not
there
changing
are
the
fairly
Fed fund
evident with
rate
regard to the
today, but there is a
geopolitical
dot
ones.
plot, so there
But
could be
some
a lot
the
of other
ones
cool stuff
around
going
the
on.
macroeconomic story in the U.S. here are nuanced
Get ready.
because of the many factors affecting
All
it
right.
right now.
Very
What's gonna be the most
quickly,
important
how much time do we
thing
have
that the
left?
Fed has to
We
watch
have
for in
20
your
seconds
mind,
left.
vis-a-vis
Thumbs
all of
up
those
for the market
externalities
going
being
up.
brought to
Thumbs down for the market going down.
We're going to be
You have
watching the
15 seconds to
developments from
cast your vote. If you
geopolitical
vote
issues with the war
afterwards,
going
it does
on.
not
In that
count.
summary of
What do you
economic
think the
projections,
reaction
I'll be
is going to be?
watching for,
Are you
whether they're
bullish?
going to
Are you
upgrade their
green?
view on
Are you
inflation,
confident?
downgrade
Or are
their
you
view on the
bearish? Are
economy,
you
given that
red?
fourth
Are
quarter
you a
GDP
little bit
came in sub
pessimistic?
1%,
Red
and what are
or
their views
green?
on the
Thumbs up or
employment
thumbs
market? Now,
down?
the bulls and the dovish members on the Fed are going to say inflation's here today, but slower economic growth
Not
this year.
much
Tomorrow, we
reaction
could
at
still get
first.
1 or 2 rate cuts into the books.
Did they
later
not
this
even
year.
release it?
Markets are currently predicting only 86%.
We didn't really move. A
one
little
rate
bit
cut
to
in
the
December
upside.
2026. Of course,
A
the
little
House
bit to the
on Fed are
upside.
going to say that
Order
inflation is
filled.
now here and it's chronic. And we
Oops,
can't
I had a
raise
pending
or maybe
order.
even raise rates sometime this year.
Interesting.
I don't know if we can show this
I
in the
guess
next
I
5
just went
seconds.
short.
Kalshi's odds for the next Fed hike.
All right,
60%
we're popping
before
here.
2028, 37 before 27. Steve Leisman has the decision. Hi, Steve.
Where's
Unchanged.
Give us
Those
Rick.
are leaving interest rates unchanged at a range of 3.5 to 3.75. It was an 11-1 vote with Fed Governor Steve Myron again dissenting.
He
preferring to
dissents
cut
on
rates by 1/4 point. The Fed said
At least
very
he didn't go
high in its
50
statement
bips.
today that the implications of developments in the Middle East for the U.S. economy are uncertain. But other than that, pretty robust or actually positive economic outlook. It continues to say, as it did last time, that the economy or the economic activity is moving at a solid pace. Say job gains have been low, but the unemployment rate is little changed. Now, as for the outlook, still one cut built in this year for the median Fed official, bringing the rates down to 3.4, and one cut for next year, another additional cut for next year at 3.1%. The long run, something that's been ticking up over time. The long-run neutral rate is now, see, at 3.1. That is up 1/10. On inflation, the median Fed official now looking for 2.7 on headline inflation. That's from 2.4 in the December forecast.
This is the SEP, the Summary of
Going back
Economic
down to 2.2%
Projections. You
in
get this
2027.
every other Fed
On core,
fund
looking
meeting.
for
This is what
2.7,
he's talking
up
about.
from 2.5, so 0.2 added there.
Oh.
Interestingly, GDP actually taking a tick up to 2.4 from 2.3 and 2.3 from 2% in 2027.
So these all
not
stayed
seeing much of a
perfectly in
GDP
line.
hit from the higher inflation forecast that is now part
Pretty
of the
much.
outlook.
No
as
real
for the
change
dots,
here.
7 officials want to hold, 12 want to cut.
They
At
think
least one
inflation's
cut or
going
more.
up, probably
5
because of
those
the
want
whole
2
oil
cuts or
Iran
more.
thing. Unemployment
The
slightly
old range,
up,
guys, was
GDP slightly
the
up.
funds rate from, if you take all 19, the bottom was
GDP
2.1,
increased from
the
2 to
top was
2.3.
3.9.
Unemployment
It's come in a
increased from
little
4.2 to
tighter.
4.3.
Now
This is all for
2.6 to
2027.
3.6. So
I guess we
a
should
little
look
bit
at the
to give on the downside,
2026
a little bit
first.
to give on the
2.3
hawkish
versus
side, and now you have a
2.4.
little bit more,
4 point, so
centered
unemployment
around
the same,
this 2.6 to
inflation
3.6 area.
up.
But
So they
again,
do think
the Federal Reserve
inflation's going
emphasizing
up.
uncertainty. Interestingly, I would point out the idea
Where's
that
the
they
dot
upped
plot?
their inflation
Right
forecast,
here.
but also
Pretty much all
they
the
upped their
same.
GDP
You do have
forecast, so that's
Myron
kind of
at the
telling you
bottom
perhaps
here being an
where the
asshole,
center of
but
the board is
no
on the ultimate
big
impact
news there.
of
Just they
the
think
oil price
inflation's going up, but
shock,
even
guys.
that's not a
All right,
surprise.
Steve, stick around here, please, because
of the
markets that
oil.
are relatively stable right now, maybe not unexpected. We're all waiting for the press conference. Let's get out to Chicago for the reaction in the bond market
Where's
right
Rick?
now. Rick Santelli.
Hell
has that
yeah!
story, Rick.
There's our boy.
Yes, Dom. If we look
There's
at all
our
the,
boy.
intraday moves, twos, tens, and dollar index, what jumps
There
out
he
right
is.
off the bat is that the fixed income markets, twos, tens, the whole curve, we started to see yields drop even before anything was read at straight up 2 o'clock Eastern. So investors were buying treasuries in front of the statement, and after the statement, it had just a minor follow-through. We're at 370 in a 2-year before anything
Rick's
was
in
read.
chat.
We're 269 now.
Rick's
We're at
in
420,
chat.
One in a 10-year, exactly the same. So you're
I'm
correct.
surprised I
Not
even
a
have
lot
to
of
say it to
movement
you
in the
folks.
market.
Come
But
on.
let's put a face on this.
He's the
If you
man, the
look at
myth,
where
the
we've
legend.
been
This is
on
the
12th of
guy.
This month, we saw 2-year yields at 3.74. The high yield close going back to August of 25. And if you looked at 10s on the 13th, they had 428. A high yield close for the move post-conflict, but they couldn't even take out their 429 high yield close earlier in the year in January. So really what we're seeing here is the 2-year yields seem
back at
most sensitive
RTH,
to the notion that we're
VWAP.
not going to potentially get any more rate cuts. But that didn't change today. That's been the way it's been moving, flattening
Brick
the yield
for
curve,
Rick.
which, by the way, hasn't really moved much in the last couple of
You
hours.
and me both,
and
brother.
ultimately, the dollar
You
index,
and me
well,
both.
the dollar index is up on the day. It was
Brick
up on the
for
day.
Rick.
It gave up a
Brick
few ticks,
for
but
Rick.
hardly at all.
Brick
We've had a
for
couple
Rick.
of bouts over 100, which is very unusual. We hit 100.36 on the 13th. That was a high watermark all the way to May of 25. So to summarize,
Rippin' Rick.
listen, the conflict is an awful thing from a humanity standpoint, from the market standpoint, especially treasuries. It's been mostly well behaved, obviously higher interest rates, but maybe the poster child for how it's dealt with this is that the 10-year couldn't even get a higher yield close than pre-conflict. And of course, the dollar index, I'm not sure it's a flight to safety. I think it's more a function of the ECB. We're talking about our central bank. ECB tomorrow, most likely they're going to be looking at aggressive tightening because the energy situation outside of the U.S., whether Europe or Asia, is changing all the dynamics on potential inflation and central bank activity. Back to you.
Thank you, Rick. Just want to turn to the panel here, David, for some.
All right, who they bring on today? Remember, Jerome Powell speaking at 2:30. We got the SEP. The major headline is no change to the Fed fund rate, but they think inflation's going up in 2026 more than they did in December.
Well, yeah, because the uncertainty is
that's the
on
TLDR.
both sides. I mean, they've changed their growth forecast, they've changed their inflation forecast. I'm not surprised by what they've done here, but I do think there are two things. One, I think both numbers are now too high. I actually think that if we get some sort of stabilization in Iran, I think we're going to have to.
Can we go back down
in the course
now?
of a few weeks.
Print
and then
account.
Oil flows,
Looks like it might be happening
by the end
for
of
you.
this year will be below 2.7. But I also
that's
think
not
that
Becky.
it is
I think
ambitious to
that's
say that we're
Becky.
gonna be over 2% growth.
I think
next
she just
year.
did something
If we
different
don't
with her
have
hair,
further
but I'm
fiscal
pretty sure that's
stimulus,
Becky.
And you've got this, this very tight labor market with the working age population is actually falling. You need to believe in a huge amount of AI productivity if you're going to get over 2% growth next year. So my guess is that eventually they pull both those numbers down, and that doesn't change rates outlook that much for this year. But maybe next year we do get some rate cuts if we go into next year with
Mir moved his dot
and
0.5
inflation
higher.
falling.
He's less dovish now.
I look at the price
because he
index.
just knew it'd be
It's almost
crazy.
Like, why do I bother looking?
Like if
Does
he
it
kept
matter?
doing
I'll let you
that,
jump
a
in
rate
here, Jim.
cut when we think
But you
inflation's
have
going
a
up.
PCE
Like, come
that
on.
has gone from like 2.2 to 2.8 over the past 18 months while the Fed's been lowering rates. We're looking at 3% plus for CPI. We were at 3.1 for core PCE last month. Does it matter? I mean, I'm sort of like, if we're just ignoring all of this because there are downside risks to the economy.
Hell yeah, brother.
I'm struggling to kind of bring this all together.
So the way I look at this is, what's the read through to asset prices? So the question I asked before the meeting was, what's the Fed's view on an inflation shock versus a growth shock? The Fed just upgraded their view on growth. So what they're telling you is that this is a price shock right now, but it doesn't necessarily translate into a valuation shock.
I had a pending short position at 900. I was just fading the key psychological level. It was in between the 50% retracement and the regular trading hours VWAP, so I liked it. I took a short. It's now a free trade. Free trade.
You getting mad? And what they've done with their upgrading and growth is that they're telling you that valuations are going to be okay as long as growth stays relatively stable. That tells me as an investor that as we see a potential drawdown in markets, this might be an opportunity to buy once we get through this, providing the Fed's correct. Now,
I figured that all out from trend
really
lines.
The difference between a price shock,
it was all that
$6.5
$6,500 trend lines class I took.
A few weeks ago where he
it's
said
all
this
about
is a
the trend
the
lines.
oil price shock that we're talking about. He did not he did not dissent today. In other words,
It's all about
only
the trend
Myron
lines.
dissented for lower
And
rates.
this is how I
Powell had
knew to
dissented in January, but
take
didn't
the
do that
short
anymore.
there.
So,
It's
like, if you
because
were to
of
say to
this
the public,
horizontal trend
who
line at
understands
that
you don't
level
want
that I
this economy
just
into
drew.
recession, obviously, but if you were to say, hey, when
That's
are
how
we
you
gonna
do
get
it,
back to
folks.
2% inflation?
That's how you do
lucky,
it.
It's 2.7.
There are special factors that are causing inflation.
I
to
can
be
do it
high
again
right
if
now,
you
but
guys
what
didn't
I think
catch
the Fed
that. So
learned from
right here,
2022
F6,
is
horizontal
it was
line,
actually
boom.
transitory. 9% inflation didn't
Trend
hang
line.
around, and
Done.
this inflation won't hang around either.
Done.
after
That's
the
how you
past
do
oil
it.
and fiscal stimulus. If you could divide a government
Cat
next year, you're
is
not going to get
pissed,
fiscal
cat is
stimulus.
screaming.
So they need some confidence in that, but eventually they're
boom.
not that scared.
Right there.
9% inflation
You guys,
was in June of
sorry.
22.
You missed my trend line class? Don't worry about it. I could do it again. I learned it from the best. So I knew to go short there because there was a trend line. And then if the trend line isn't there for you, you just have to draw it. So it's a horizontal trend line. Boom, right there. Once again, if you want me to do it in slow-mo, I could also do that for you by doing this. If you didn't see it before, I took a short at 900. I did that because of the trend line. You can draw that by doing this. So that was your slow-mo replay. Do you guys want me to try a faster version of it? Faster, slower? Are you happy with the speed? I'm happy to do whatever makes you guys happy. You know, this is your show as much as it's my show. So whatever helps you guys at, I'm happy. I just want to make you guys happy. More slow-mo trading. I'm good. All right, just like I said, I'm here for you guys. Whatever you guys need, I am the 6K slow-mo. We need 4X. Dude, we're going to need a little Ritalin to pull that one off. But yeah, it's just a classic trend line. I saw a trend line there, so I made a trade at that trend line. That's what trend line trading is all about. It's just what it's all about, brother. So anyway, and I made it a freebie trade because technically, nah, dude, I'm going to make so much fucking money off this trade. It's going to blow your skirt up how much money I'm about to make on this bad boy. You know what? 900. Here's what we're about to do. Boom. Let's lock in one of these at 800. Out of the gate, he's going for 100-pointer. That's what he's doing, brother. Dude, 100 points or I don't even get out of bed, dude. I don't even get out of bed for less than 100 points. So we're locking that in. And actually, I need to change this indicator. Order line decorator, percent, currency. You know what? Let's do that. Boom. Okay. Ticks, points, and amount. All right. I like that. Yeah, if it breaks down this trend line, I mean, I care more about the 1 minute trend line. It is attempting to break the 50 EMA on the 1 minute. That's this light blue line. If it bounces out of there, I might be a little bit screwed, but in reality, I'm not that screwed because it stops at break even. So I'm either, hey, nothing on the trade and it was just fun to play this game with you guys, or my trend line work. And that's what really, really matters. So let me know if you guys need me to explain it even slower, and I could work on that for you.
And what the lingering effects are. There has to be some kind of at least influence of what that's going to do.
That's not Becky.
To the rate picture over
That's
the course
not
of the
Santa.
next 2, 3, 5, 6 months.
Well, that's the key question for the
breaking
markets, because the
down.
longer
Bitcoin's
that the war
up a
continues
little
and the higher
bit.
that oil prices stay, the more chronic inflation will
That's
become.
not
What we've already
Becky.
seen with today's PPI
That's not
numbers
Santa.
and recent inflation
You
numbers
smell
is
like
that
beef and
disinflation
cheese.
had stalled. So we're not in an environment where disinflation is continuing, and now we have to worry about
Do I want to move the stock down to 75 because that would guarantee 1,000?
A serious economic slowdown.
We're at
Now,
68
argument
right now.
still
It is
that you can
seemingly
maybe get
bouncing
2
off
cuts
of that
later this year
level.
because the economy will slow If the war ends in a reasonably timely manner and oil doesn't stay above something like $120 a barrel for an extended period of time, inflation will move
starting
behind
to
it.
bounce a
So I
little
think you can still
bit.
get maybe 2 cuts this year and early
It's
cuts in
bouncing right off that
2027.
50
I
EMA
want the
1
good
minute.
cuts,
Buyers
the
are
kind where
showing
inflation
up.
comes down, not the bad cuts because we're losing 92,000 jobs and so forth. Mike Santoli is down or over at the Nasdaq, I should say.
What's Mike up to?
Market response, and you heard what Steve just said there. He thinks this market may just be a little bit too hawkish about what goes on here with Fed policy for the rest of the year.
See right there, we bounced right off the 50.
The market is going to get repriced according to where it thinks.
And we bounced off of the overnight low. So this is actually a key reaction level,
the fact that we came into
865.
this period, even before
I probably should have
the oil
taken one
spike,
contract off there.
with a kind
Probably
of wait
shoulda.
and see Fed, and so the market had absorbed this idea. We weren't looking
Probably
for a quick
shoulda.
inflection. I work under the premise in general that a Fed on hold is, all else being equal, a positive thing because it means they're not responding to any particular emergency. Fed has cut 175 basis points in a year and a half. Maybe some of that still is acting as insulation. And if you look at the projections, look, the stock market can live with 5% nominal GDP
March
growth.
18th,
That's what
been
we're
little
gonna
change
get.
in recent months. The implications of developments in the Middle East for the U.S. economy are uncertain.
The market probably
Current
doesn't
rate,
have full confidence
median.
that these projections by the committee are kind of
increase in
fully
inflation,
stress-tested for all the different scenarios
Fed funds
as
rate
we
they
know
think
them
is going to
right
be
now.
the
They might
same
seem a
and
little bit
slightly
based on a
longer in the
stale,
long
set
run.
of assumptions and inputs.
This
Because,
is
by
the
way,
big
economic
change
surprise
right
index
here.
has been
The
fine.
slight
A lot of the
increase in
forward-looking
inflation
indicators of growth
expectations for
look
this
okay.
year, which is because
and so,
of
we're able to look past the one negative
the
job,
uncertainty
month
in the
that we
Middle
just
East.
got. So all of that mixed together, market doesn't see a lot to react to in the immediate term. I do think the market has to root for pretty good economic numbers because if you're going to be pinned in place.
Very quickly before Powell gets going, Powell's taking the stage in 15 minutes. So if you're trying to pass an eval, you can do that in one day on Apex. So you can still get accounts, eval tests in time, code Goonie, 85% off. You can't do that on Lucid, but you can still get a pretty sick deal. I know this says 40%, but your first two are actually 50% off if you use that code Goonie. Shout out to Apex. Shout out to Lucid for being the partner of today's show. And I also wanted to let you know, if you're just joining in right now, of course, we made some bets, and here are the bets that we're rocking. So we are betting on what will Powell say during his press conference. We said yes to AI. We said yes to Beige Book. We said yes to oil. We are looking for him to say those words in this press conference. AI, Beige Book, and oil. Listen for that. And then we are hoping he does not say central bank, dissent, gas, Iran, pandemic, pardon, president, shock, shutdown, tariff inflation, or volatility. So the big bet is right here. Iran. I threw down big. I threw $250 on the fact that he won't. Oh, holy guacamole. Go, 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 go. Dude, I'm telling you, good people make money. If you are a good person, you're going to succeed in the world of trading. If you are not a good person, if God's light does not shine upon you, you're not going to cut it in this game. You're not. Was my order an accidental random order? Yes. And guess what? I'm making money because God shines upon me. It's just that straight up, folks. Like, you don't need to learn more about trend lines or dovish or hawkish feds or what's happening with options flow. That's what everyone's trying to sell you those classes to teach you something, and they're so full of it. I mean, if I sold a class on trading, I would teach you how to help grandmas cross the road. I would teach you how to tip a little bit extra at the Sunday service. I would implore you to maybe do the dishes before your wife asks you for the 19th time to do your dishes. My class on how to be a better trader would basically just be on how to be a better person. Because if you're a better person, the market gods will reward you. It's honestly just a game of karma. It really, really is. At the end of the day, if you have good karma, you're going to make money. If you don't have good karma, you're not going to make money. So, I don't know. Maybe before you start ripping it with Powell, maybe go like literally see if you can hire a grandma and like carry her groceries home for her. Try that. Maybe stop shit posting on Reddit and trying to start fights. Like there's so many things you could be doing, and instead you're fucking drawing trend lines on your chart. You're wasting your time at a certain point. BS, market is fixed. It's fixed for people who are obviously good people. That's who it's fixed for. Look at that rip. Dude, we ripped from 826 to 868. We ripped 40 points like it was nothing. It only took 1.5 minutes. That's crazy. Anyway, as you can see, I have a short position. I'm short 2 contracts. The first one I'm trying to lock in at a 100-point gain. A 100-point gain in the futures market is $2,000. So I'm short at 900. First one I'm trying to lock in is at 800. Anyway, where was I? Oh, we bet big on him not saying the word Iran. So I don't want him to say that word at all. If he says something, maybe he'll just say the Middle East. But I'm really, really hoping. I mean, I put down $250. He will not say the word Iran. And fuck, the odds of it are going up now. Shit. That's my big payout one, is if I'm right, I get $646. Pandemic, pardon, president, shock, shutdown. Dude, those are locks. They're locks, dude. We got that. We got that locked in, dude. Like, there's certain things you know in this world that are just a sure fucking bet. For example, not saying the word Iran today at the 2:30 conference. For example, locking in this short contract at 800 for a 100-point gain, aka $2,000. There's certain things in this world that they're just evident. I know that there's a market and there's probabilities, but beyond that, like in the metaphysical space, there's certain things that you just know it's a lock, brother. It's an absolute lock. And that's how I feel about it. That's how I feel about it. And yeah, whatever. Text your friends. Make those rumors. I hear the murmurs about me that I'm off my rocker. I've lost it. I don't know what I'm talking about. But we're going to see who's in the loony bin after this one. Well, it might be me, but it'll be me with more money. That's for fucking sure, because this is a lock. This is absolutely guaranteed. Garrett can't lose. Can't lose. Obviously, this is not financial advice, and don't make any bets off of the shit that I say or do. That would be stupid, but I am up a shitload of money. If he doesn't say Iran, Mike will gift you subs. Mike, you better get that credit card ready, because he's not saying it. He is not. I forbid him from saying the word Iran. I called him right before that. He's about to go live. Right before I went live, I texted him. I was like, listen, brother. Listen, Jerome, if that is your real name, you better not say the fucking word Iran. So that's where we're at. That's where we're at. Are you trading NQ? No. I am just trying to make my mom and Jesus happy. I'm a big trend line trader. Ever since I spent $6,500 on a trend line course from a internet wannabe, it's really what opened up the world of trading for me. I realized if I had upward and downward slanting lines, that it would bring my trading to the next level. Where's Mike? Where is Mike? I don't see Mike. Mike, people are saying that you're talking a big game about this whole Iran thing. Big Iran Mike. What's up? What's up with AMC? Any thoughts? Yeah, it's an amazing company that it's just being shorted in dark pools, and they're suppressing price, and it's going to squeeze any one of these days. I learned that in my trend following class that I spent $6,500 on. Is crude up or down? My dad used to refer to my form of comedy as rude, crude, and inappropriate. And oddly enough, he was not talking about the commodities market. I mean, up or down since when? It's trading at 95 a barrel. We were at one point at 98. We were at one point at 94, and now we're at 95 and some change. Kimmel is Mike. We're talking about Mike Kimmel? Well, that's not fair, because he's an insurgent on the ground in Iran. Mike has insider information to the whole Iran's. Like, that's just not fair. We're betting against insider information if we're betting against Mike. Boom time soon. Are you saying for the market or for Iran? Which one are we talking about at this point? OI rejected at VWAP. Oil rejected at VWAP. It happens. Now, if I were, I just want to clarify, if I were a smart trader, I would move my stop down to 68. I would be guaranteeing myself $1,270 if I were a smart trader. But you guys did not tune in to a smart trader show. In fact, you turned into a retard maxing show where every single day we see as a community if we can push the bounds of how much of a retard I could possibly be. So once again, if you're here to learn something, that is the point you would use. If you are short and you caught it, you're probably going to be wrong if it exceeds 68. Most likely you're wrong. So you want to get your stopped probably to 68, 69, something right there. That's a legitimate reversal. So that's what you would do if you were smart. But once again, you didn't sign into a smart show today. You did not sign in to a smart show. Dude, 100 points. Like I said, I don't get out of bed unless it's 100 points. Options flow hit the low of the day with the Mag 7. S&P 500 actually hit the high of the day at 201 and then took a little bit of a hit, interestingly enough. I stop at 69 every Saturday night. You and your boyfriend, burn. Fucking, you need some ice for that burn, VTech? Yo, if someone's near VTech, could you get him some ice? Maybe a cold bag of peas? Because I just burned the shit out of them. Did FOMC happen yet? If you want it to, brother. Is the FOMC in the room with you? Is it in the room with you? Is it talking shit to you? Is it making fun of you? I come here for money, Matt. Oh, probably the wrong show. Yeah, if you're coming here to make smart decisions within the marketplace, I think unfortunately you stumbled into the wrong stream. We're here to lose everything, but to have a fun time while it happens. We're here. I don't think we're intentionally trying to lose everything. It just is a byproduct of the type of dumb shit that we do. Just an unfortunate byproduct. Should I update my risk? I mean, I'm already at break even. Like, what's the worst that could happen? Vibe trading only. That's pretty much what I've been doing all day today because I don't really let any of my bots or systems run on FOMC days. So any trading I do is really just pure vibes. It's just vibes through and through. Oh my God. For so many reasons, this should be your risk point. If you are short and it exceeds 68 and you're still holding on to it, you're just a lunatic. What to do when Powell starts speech? You know, the fact that you're spamming that over and over just makes me want to answer you. Like, it really does. Like, I'm like, oh, that's sick. Like, I appreciate all these people who are being courteous to the rest of the community, so I'm going to fucking ignore them. And then the one guy who's spamming over and over because he has the psychosocial development of a fucking toddler and can't behave with a room of other adults, that's the guy who I'm going to answer. 100% you are the person who I want to give my opinion to because you just seem like such a cool guy. Like, you just seem so fucking awesome that that's exactly who I want to talk to. All right. Powell is starting in 2 minutes, well, 2.5 minutes. And unlike our president or really any other elected official, he is not late. He starts promptly at 2:30. So it's going down soon. It's going down. Is the market going down? I have no idea. Your guess is as good as mine. Well, actually, that's a good question. Very quickly, here's a look at the Mag 7. Here's a look at the S&P 500. Here's a look at the momentum of the S&P 500, 5, 10, 30, and 4 hours, all bearish. Here's a look at the NASDAQ, 5, 10, and 30, and 4 hour. 4 hour is maybe pushing bearish. We're at like kind of a key level right now. So with all of that in mind, and obviously we kind of already went over the SEP, the Summary of Economic Projections, that also came out at 2 p.m. What you guys thinking, bullish or bearish? So from the moment he starts speaking at 2:30 to market close, do you think we're going to be going up or do you think we're going to be going down? I'm not talking on the day. I'm literally saying from the moment he starts speaking. Breaking, no change to the rate. If by breaking you mean that was announced 28 minutes ago, and then also on top of that, we were already 99.6% confident that there was going to be no change. Yeah, that's breaking news, brother. I'm so short you could call me Harry Dinkler. Bullish, bull. Bullish, pump and dump, up and away, up then down, up, bullish, down, down. You guys are all betting against me. You're all just saying that because you know I have a short position right now. It's a little rude. It's a little rude of you. All right, he's going to be starting any second. And these are all the words that we want him to say. We want him to say beige book. We want him to say oil. And we don't want him to say any of these other words to say no. The account started this day off with 4,494. Let's see how it ends. Let's see how it ends. All right, we have 30 seconds, folks. Buckle up. Time to fucking strap in, brother. Oh, yeah. Let's get it. Let's get it. Start it. Start this thing. Good afternoon, everyone. Good afternoon, everyone. All right. 3, 2, 1. All right. Where is it? Why is the stream not started? Come on. Let me check this one just in case they're a little. Oh, they're already started. What the fuck?
The U.S. economy has been expanding at a solid
Fed Chair Jerome
pace.
Powell taking the podium.
While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. From last September through December, we lowered our policy rate 0.75 percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation.
Don't you say fucking
but
Iran,
it is
dude.
too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks.
Order filled.
In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and now there will be some effects on inflation coming forward. The thing that's really important that we see this year is progress on inflation through a reduction in goods inflation as the one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to be seeing that to sort of understand that we actually are making progress, because on net we didn't make progress. And if you look at total core inflation, it's about 3%, and some big chunk of that, between 1/2 and 3/4, is actually tariffs. So we're looking for progress on that. The question of whether we look through the energy inflation doesn't really arise until we have kind of checked that box. It, of course, is kind of standard learning that you look through energy shocks, but that's always been dependent on inflation expectations remaining well anchored. And I think now it's also dependent on what you mentioned, which is that broader context of 5 years now of inflation above target. We have to keep all of those things in mind. And the question of looking through when it does arise will be one to approach not lightly, but, in the context that you mentioned.
And just on the S&P, can you help us make sense of why there is still a bias to cut for most officials this year, despite the upward revision to headline and core inflation and the essentially unchanged forecast for growth and unemployment? Just curious, kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so, there are 19 people, and so 19 reasons, 19 individual submissions, and if you notice, the median didn't change, but there was actually some movement toward, a meaningful amount of movement toward fewer cuts by people. So 4 or 5 people went from 2 to 1, let's say, 2 cuts to 1 cut. And each person has individual, stories behind what they want to do, but essentially it is that the forecast is that we will be making progress on inflation, not as much as we had hoped, but some progress on inflation. It should come as we start to see in the middle of the year progress on tariffs, going through once and then tariff inflation coming down. We should be seeing that, and the rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut.
Thank you. Howard Schneider with Reuters. Just to follow up a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result of the oil shock or something else?
So that's going to be part of it. But, that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. But yes, but no, there's also just the feeling that we haven't seen, the progress that we had hoped for on core goods and on tariffs and on the rest of it.
I'm not pissed. You're pissed.
So for whatever reason, people did write up their
pissed.
inflation forecast. That will certainly be tied to events in the Middle
I'm
East
not
and the price
angry.
of
You're
oil.
angry.
But it's also,
your
I think,
money
a reflection
gun's broken.
of,
Mine's not broken.
Of the slow progress we've
yours
seen
is
on tariffs,
broken,
which we
loser.
believe we will see.
You're a
It's just a
fucking
question
loser.
of how long it takes.
You don't have
for
a
them
money
to get
gun.
all the way through the economy, and it just takes some
Mine's
time.
fine. I'm choosing to not use my money gun, but it's my own choice. If I wanted to use it, I could use it.
The expectation that the oil portion of this will pass through.
Mine's fine.
Or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas prices,
Order submitted.
Diverting spending from other parts of the economy.
So I didn't get the second part of your question.
That consumers are going to be potentially diverting money
Mine
to
is
gasoline
fine.
from other parts of the economy.
Don't
there
say
could
gas.
Be a growth shock or a redistribution of spending there that can hit consumption, wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because
Yes, say oil. Oh, he already said
in
oil.
case growth starts to
99.
slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger.
Oh,
we just
shit.
don't
He
know.
said
So
shock.
people
Fuck.
are writing down something
And he
that
said
seems to make
tariff
sense to them,
inflation.
but have
Son
no
of a
conviction.
bitch.
To your point, if we have high, if we have a long period of much higher gas prices, that's going to weigh on consumption. Now,
He
it'll weigh
said
on
gas.
disposable
He
personal
said
income,
oil.
and it'll weigh on consumption. But we don't know if that's going to happen.
Fuck. I said no to
something
gas.
quite different than that. We might have much lower than expected pass-through. So people write
My
down.
life is
this
falling
is one of those
apart at the
SEPs where a number of
seams.
people mentioned if we were ever going to skip an SEP, this would be a good one because we just don't know. So I wouldn't say there's a conviction that this is going to go through
But
quickly.
Iran's
or not
the
quickly.
big money
It's just
right
you gotta
here.
write something down.
$646
and this is something that
payout.
is,
Don't say Iran.
that people wrote down. So, we don't debate how long, how do you do that? We wouldn't be able to debate what the length of or size of these effects would be. We just have to kind of make an individual statement. And also, what you've written down before you'll be reluctant to move too far away from that just because you don't know. It's so unclear what the direction from this particular end will be. Meanwhile, the growth has been solid, and inflation, the overshoot is mainly from the goods and tariffs. And, the labor market the unemployment rate, of course, is little changed since September. You have a very, very low break-even rate, apparently, for new jobs with little growth in either demand or supply. But the U.S. economy is doing pretty well. It's just we don't know what the effects of this will be, and really no one does.
Steve.
He also said tariff inflation.
Mr. Chair, in the past, the staff has suggested that higher oil prices, they have a hit to consumption, which Howard was talking about.
Don't say Iran.
But that's somewhat offset by increases to domestic production. I wonder if you could talk about that dynamic, especially to the extent that how much U.S. production is happening right now.
So the first thing is there is, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, sorry, your question was?
What the staff is saying about, and has said in the past.
Yeah.
About
so there'll be an offset.
Offsets, yeah.
So that's true. We're a net exporter of energy, right? So any effects on employment and economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable and they may even do more drilling. If you ask oil companies about doing more drilling, though, they're going to want to see, a consistent rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long time. So they're not sitting there waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned, careful judgment that we're going to have higher oil prices for an extended period of time, meaningfully higher. So I wouldn't say there's much of that happening. Not much will be happening now, but some of that could happen over time if you see that. But so the net of the oil shock will still be some downward pressure on spending and employment and upward pressure on inflation, of course.
And if I
We're
could just
net
follow
up
on
right now on
question,
these.
how much do you worry that
As long as he doesn't say Iran, the odds, I bought at 37, it's trading at 73. I'm crushing this bet.
Undermine the credibility of your commitment to the 2% target.
We have to do our analysis and think these things through carefully, but of course that's on everyone's mind. We're well
Why would he
aware
say pardon? Why would he say president?
But you don't want to overreact to that. You want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision making more than is appropriate. It's more the thought that it's been 5 years and we've actually had
tank of gas is going to cost $700. Thanks for the support, brother.
An energy shock of
it's
some
all right.
size.
I think I can afford
it. We
it.
don't know what that's going to be actually.
Maybe.
And it's one of those things where it's
depends on how
a
expensive gas
set
gets.
of things, and you worry that that's the kind of thing that can cause trouble for inflation expectations, and so we worry a lot about that, and we are very strongly committed to doing what it takes to keep inflation expectations anchored at 2%, and I think it's important that we do that. Very important.
Nick.
Nick Timmeros, The Wall Street Journal. Chair Powell, you've described monetary policy as modestly restrictive. If the unemployment rate is roughly stable, inflation moving sideways in the high twos, with an ongoing overshoot in services and non-housing services, not just goods, and the economy doing fairly well as you just outlined, what gives you confidence that inflation returns to target over the next couple of years?
Okay. So I would say the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not. Remember that a big part of the disinflation we're looking for is just the runoff of when tariffs are put into place. Of course, what they do is they raise prices to some extent, to the extent those prices the tariffs are paid by consumers on a one-time basis. And we're waiting for that process. It takes 8, 9, 10, 11 months a year to go through the system, and we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system, so that goods inflation will return closer to what it's always been. I mean, it used to be for many years it was negative, and then the year before tariffs came in, it was 0, and it's running at like 2% now. So, and so that's kind of goods inflation is running at 2%. So that's not coming from standard Phillips curve restrictive, restrictive policy. It's coming from the runoff of a one-time thing. We also think it's important, though, to keep policy either mildly restrictive or close to that, but not too restrictive because of the weakness in the downside risk in the labor market. We are balancing these two goals in a situation where the risks to the labor market are to the downside, which would call for lower rates, and the risks to inflation are to the upside, which would call for higher rates or not cutting anyway. So we're in a difficult situation, and we feel like our framework calls on us to balance the risks, and we feel like where we are now, which is kind of on that borderline, the higher borderline of restrictive versus not restrictive, we feel like that's the right place to be.
Can I ask about core non-housing services, though? Because there are some people who think that it hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services inflation maybe been slower to follow?
That's a good question. It's frustrating. Labor non-housing services they basically moved sideways for a year. They're at the same level, and we do expect that they will come down. But it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be seeing, because to your point, the labor market is clearly not a source of inflationary pressures, and that should really matter for non-housing services, but we're not seeing progress there. So we do, what we expect for next year is what we want to see for this year, rather, is continued progress on housing services, finally seeing that, the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we'd like to see. But it's a good question why we didn't see much of that last year.
Edward.
Thanks, Chair Powell. Edward Lawrence with Fox Business. So in December, we saw employment numbers revised down to negative 17,000. January revised down. February posted a loss of 92,000. Is the employment side a far greater risk than the inflation side? Because we are seeing inflation, CPI is close to 2%. PCE has ticked down overall.
It's really, I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk than the other. So you can point to the unemployment rate being stable, and in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration policy largely, a ratio is going to be a better thing to look at than job creation, for example. So, and the ratio is the unemployment rate, and it's been stable since September. So that tells you that. Inflation, you can.
So that tells you that.
3.0% core. Inflation 2.8%.
Snapping 800
headline.
Again.
So we've been well above the 2%, that amount, whatever it is, 0.7, 0.8, or a full percentage point above 2% for some time, and that's a concern. We need to get back down to 2%, and we need to keep focused on that, even though we do now face some new inflation from energy. So I'd be hard pressed to say that one of them is obviously more at risk than the other.
And if I may, what happens if there's no Federal Reserve chairman confirmed on May 15th? Would you stay on?
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed. That is what the law calls for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality. And I would refer you to the statement that was in the Fed's brief that you all have seen, and I won't have anything more for you on that. On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet, and I will make that decision based on what I think is best for the institution and for the people we serve. Figuring you probably were going to set the dominoes off there, Edward.
We'll go to
And I'm not going to have any more to say on those issues, by the way.
Thank you very much.
I'm not leaving.
From the Financial Times. People have drawn quite a
Order
few
can't-
historical
order
parallels
submitted.
with the current situation. We've seen oil price
Thanks
shocks
for who
in the
pointed that
past.
out.
Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent would you think we're in a different place today? Thank you.
You know, it's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see due to tariffs that I mentioned, I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
And just one follow-up, if I may, just on the BLS report that was mentioned briefly there. It doesn't seem from the projections or from the comments you've made today about the unemployment rate and focusing on that your view on the labour market story, to a large part being a supply-side story, has changed despite the quite negative number in February. Would that be the right take, and was there anyone else in the room who thought differently, and that the February jobs report was cause for concern?
So I think you have to take the two together. You know, in a way, the January report was a positive surprise, and the February report was a negative surprise. If you put them together, you get something in the middle, and I think you have to really, as you do, I'm sure, realize there was a strike and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding that, so what do you see if you take a step back overall? There are a number of indicators that suggest a degree of stability, but the thing that I think good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector. But actually that looks like that's about what the economy needs in terms of dealing with very, very low, non-existent, really, growth in the labor force, which, of course, we've never had in our history. So you've got a sort of a zero employment growth equilibrium. Now that's balance, okay, but I would say it does have a feel of downside risk, and it's not kind of a really comfortable balance. So we look at that, we see it, we get it, and I mean everybody understands the arithmetic, and that's you can say the break even is zero, but nonetheless it's something we're watching carefully, and are concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is really the changes to immigration. That's the biggest factor there, and but nonetheless something we watch carefully.
Andrew.
Thanks, Chair Powell. The economy's experienced a series of supply shocks in the last few years, COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world that makes supply shocks more common, and does the central bank need to
have upset
start
the
taking account of
gods.
the risk of supply shocks as a more common problem?
You know, we did go through a long period where the shocks were all demand shocks, and so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years, for sure. And it's just a very different thing, and a much more difficult thing, because it does immediately raise the question of tension between the two parts of our mandate. But has the world changed? I mean, COVID is a one-time thing, right?
Maybe.
This energy
depends who you're talking to.
Shock is a one-time thing. It's not because of some broad tendency or anything, I don't think. And the oil shock with Ukraine was also a consequence of military action. So I don't know that the world has changed in a way that there'll be more supply shocks. But there's people have written that paper and that speech a number of times. A number of people have tried to make the case that is the case. And in fact, we have seen more supply shocks in the last 5 years than we've seen in many years before that. It's a fact.
Okay.
It's a fact.
You said last year that the Fed was reviewing its communication strategies, including the SEP, as part of its framework review. Whatever happened to that? And I have like 5 follow-ups to that.
Can you say the word Iran?
What would you change about Fed communications if you had the time? Thanks.
What happened about that was not much.
Not much, brother.
You know, we looked carefully at many aspects of the SEP and of our communications, and there weren't any ideas that had very broad support on the committee. And you don't want to make a change to your communications unless you have the committee behind that. So we didn't really make any changes on that. I had hoped that they had some things that I wanted to do, but they didn't attract broad support, and we'd already made all the changes we made to the framework. That was a critical thing. So we didn't. And, I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Michael McKee from Bloomberg Television and Radio. The minutes show in January some members of the committee wanted to include a two-sided guidance on policy. Was that discussed today?
Come on,
the rise
baby.
In the inflation expectations, how much support for a
hungry
policy
hippo
warning would there be?
Hungry
So it did come
hippo.
up today. The policy the possibility rather that
I
our next
am
move
a
might be an
very
increase did
hungry
come up at the
hippo.
meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case, and of course we don't take things off the table. But you correctly characterized
give me
what was in the minutes. That's
I am a very hungry
something
hippo.
very much like that conversation did
come
happen. What was
here.
your second question now?
I was just one
I
question
find
there,
you.
but follow-up would be, there are a lot of goods besides oil that are trapped in the Strait right now, and a lot of supply chains getting snarled. How much concern do you have about whether, if this becomes an inflation problem beyond just oil, whether there's anything you can do about it or would do about it, given the efficacies of monetary policy?
You can worry about other commodities. You can worry about all of the ways that oil-related commodities go into manufacturing and that kind of thing. The truth is it's completely out of our hands, and we just, like everybody else, we have to just wait and see what happens. And it'll come down to how long, the current situation lasts, and then what are the effects on prices, and then how do consumers react to that kind of thing. Really, I wouldn't speculate in any way, and there's really not a lot we can do other than kind of watch and see.
Ready or not, here I come.
Afternoon, Chair Powell. Maria Luisa Capurro with Bloomberg News. I wanted to ask you, you've said longer-term measures of inflation expectations reflect confidence that the Fed will get back to its 2% goal. But there are some colleagues of yours who have pointed to higher dispersion in household service, in business services as well. So, and that they take as a signal that inflation expectations may be less sticky than in the past. I'm wondering if there was a discussion around that at this meeting across the committee, and what were the views of what is the state of inflation expectations and the risks from higher oil and gas prices.
So at this meeting, a number of people mentioned and staff briefed on short-term expectations having moved up quite a lot for reasons we understand well. But long-term expectations, you can always find one that's troubling or some aspect of one that's troubling, but ultimately, right through this whole period, the overwhelming majority of the things we look to, including markets, including surveys of the public and also of forecasters, they've all been pretty solid on longer
profit,
term
brother.
inflation expectations.
How about lick my taint?
Being right where they need to be, consistent with 2%. So that continues to be the case. We didn't have a lot lot of conversation.
I would
about that.
rather
I think everyone
lose
does agree
this entire
that,
trade. I'm
we'll
talking
be
it
watching
bounces
those
all the way
extremely
to
carefully
bounce
as
back
we
to
see
break even,
the
then
effects
make profits right now.
Of the price increases come through from the conflict.
And still on how the discussion went across the committee, before coming to this meeting, there were some members who were like discussing the risks of a slowdown in growth and at a time of where inflation remains high. It really doesn't seem
some trades are about
most
principle.
members are penciling in a slowdown in growth.
No.
But has there been any discussion of the risks of stagflation at this point?
So people actually wrote up their
is actually
growth forecast
losing
by a tenth, and I think that's
under the
probably to do
assumption
with
that I've
just
ever had
growing
it.
confidence in productivity. But sorry, and your
I
second
do have a
question was
screwdriver.
Just
tuck this away for
If there
later.
have been any discussions
shit.
about the risk of stagflation,
stagflation
scenario?
Yeah, so as I mentioned, there's tension
Tuck
between
that
the two
away for
goals,
later
right?
if we need
the
it.
Upward risk for inflation and downward risk for employment. So, and that puts us in a different situation. You know, when we use the term stagflation, I always have to point out that was a 1970s term at a time when unemployment was in double figures and inflation was really high and the misery index was super high. Add them together, you get the misery index. And that's not the case right now. We actually have unemployment really close to longer run normal. And we have inflation that's, 1 percentage point above that. So calling that stagflation, it's not, I would reserve the term stagflation for, a much more serious set of circumstances. That is not the situation we're
Shit.
in. What we
Didn't
have
we bet on
is some
stagflation?
tension between the
I think
goals,
I skipped that one.
And we're trying to manage our way through it. It's a very difficult
Good.
situation, but
Not
it's nothing
good.
like what they
Good.
faced in the
Not
1970s.
good.
And that's,
Good.
I reserve stagflation
Good.
for that, the word for
Not
that period.
good.
Maybe that's just me.
Good. Thus far good. Not good. Thus far
much.
good.
Elizabeth
Thus far
Schulze
good.
with
Not
ABC
good.
News.
Not good.
President Trump says that oil prices and overall inflation will go down very rapidly as soon as the
So
war
far
ends.
up
Do you agree
$300
with
if we were to close it out
I
now.
don't have a forecast on that.
Yeah.
We're thinking about
Don't
the
say it.
impact on American households.
Don't say
as
it.
you know, they've been facing these higher prices for years. They've seen an almost $1
Don't say
increase in
president.
gas. How worried are you about households, especially lower income families, being able to afford those price hikes? And should people be bracing for higher costs, including for food now?
We don't know how big these effects are going to be, and
He's
I
not
don't
gonna
want
say
to
it, dude.
characterize
He's
them in any
not
way.
gonna
Of course,
say it.
People are already
Look at
seeing
the
gas
payout on
prices.
that
Gas
one,
prices are up almost
$3.27. We're
$1 a
crushing.
gallon. We hope that isn't for a long period of time, and of course people will feel that, but I don't want to speculate about what that might mean, because honestly that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does. We're going to see how this works out, and I just would leave it at that.
Victoria.
Hi, Victoria Guido with Politico. I just wanted to ask, for purposes of the next meeting, how the Middle East war develops between now and then, how are you thinking about what might guide action at your next meeting? I mean, if we have oil prices, above $100 a barrel the entire time until the next meeting, is that going to change your wait and see stance? Like, what would lead you all to move, or are you on hold pretty indefinitely?
We'll have to wait and see. I mean, we always say we're going to learn more by the next meeting, and usually we do, but in this case we're going to learn a lot, because we're going to learn 6 weeks to the day till the next meeting, and we're going to see whether what happens is it's going to be very important for the way the economy looks and the way the outlook evolves with what happens in the Middle East. That's going to be a big factor, and we'll know that then. I don't know how it's going to affect our thinking. I really don't. And we did talk about alternative scenarios a little bit, but it's just, I wouldn't bring that in here. It's very uncertain, and I just want to remember that we don't know, and we shouldn't assume it's going to be one thing or another. We're going to see.
So is it a matter of you don't know how the situation itself is going to evolve, or even if things remain as they are, the economy could still remain relatively
really
durable in face of them?
Yeah, that's true too. No, I mean, the U.S. economy has just, made it's been strong through a whole bunch of challenges. I mean, if you go back to 2023, when we raised rates a lot in 22 and 23, and close to 100% of economists called for a recession, which didn't happen. In fact, 2023 was a really strong year. So the U.S. economy has really been just just doing pretty well through a lot of significant challenges over the past few years. It's been amazing to see. And I don't know what's going to happen in the next intermeeting cycle, and I don't know what's going to happen in the Middle East. I wouldn't want to speculate.
Hi, Chair Powell. Thanks for taking our questions. What makes you so certain that tariff-related price increases will be a one-time effect? I don't think we've seen you since the Supreme Court tariff decision, and it's pretty clear that none of us know what the extent of the tariff shock will be as the administration moves to replace some of the tariffs that were overturned. So I suppose I'm curious, what would make you question this certainty that tariffs are going to be a one-time price effect?
Well, I would not at all use the word certain about my views on that. I'm not certain. I'm uncertain. But just if you think about what it is, it's a one-time increase in the price of a good, right? And what inflation is ongoing increases in prices this year, next year, the year after. That's what inflation is. It's not a one-time price increase. There's a very, very big difference. The public doesn't really focus on that, but that's the difference. And tariffs should be in theory, unless they cause people to start expecting still more tariffs the next year and still more tariffs the next year, they should be a classic one-time thing. People say the same thing traditionally about an energy price spike, because traditionally prices go up and they come back down. And by the time monetary policy would react, it would be over. So I don't have tons of confidence on that. I think that the theory is probably right, but as usual, the time it takes to get all the way through the economy is just very uncertain. And we found that coming out of COVID, that the inflation did go away, and largely for the reasons we thought it would, but it took 2 years longer than we thought. So I think we have to be humble about knowing how long it will take for tariffs to go all the way through the economy. And so what we've been doing is, our staff's been doing, it's very interesting. They started off with just an estimate because there wasn't a real history, and then they've built, based on the history that they're seeing of tariffs coming through into prices, they can now have an arc. And for all the tariffs, they can say, well, so we have, I think, a slightly more confidence that we will see tariff inflation coming down, not prices, but you won't see further increases. And we should start seeing that more and more in the middle parts of the year. We do expect that. Now, you're also right, though, that the level of tariffs came down fairly meaningfully in the wake of the court decision. But the administration said they're going to get that rate right back up to where it was. So, and we assume that they'll do that over time. So that's how we think about it.
Thank you.
Hi, thank you. Chris Rugaber at Associated Press. You talked about the shortcomings of the SCP in this environment. I wanted to ask about, or throw in an additional thing, which is the fact that it's happening before transition. Is there still some value, perhaps, in the public knowing what other Fed officials are thinking, the ones who will stay on for the rest of the year and beyond? And does that even handicap your successor in any way? Well, just in terms of having a whole committee expressing its views, is that something that locks them in for the rest of the year?
No. We never. The SEP is never. People are more than happy to change their SEP dots. They're no way bound by them. It's your opinion at a moment in time, which can change based on events. Sometimes very quickly. So it never locks people in. People are more than happy to be proven wrong in either direction. And so I just think we do it. And, I mentioned this was a time when it's very hard to do it. During the pandemic, we actually took one meeting off, I think. But we don't like to do that just because it's hard to do. We should just keep doing it. But I just would say for this one, though, I think it's even more than usual good to take the forecast with a grain of salt, because subject to just very high levels of uncertainty.
Brian.
Hi, Chair Powell. Brian Chung with NBC News. So you mentioned at the beginning of this conversation that you're well aware of the history of inflation running above target. It seems like that might be what's underpinning the affordability problem that we're hearing a lot about.
I would love for
on
him
Main
to say
Street. Are there
AI.
any
Beige
signs
book,
to
my
you that that's
producer
impacting the
fucked me on
psychology
that
of the
one.
consumer, especially given that they're a big driver
miss.
of
Thus
overall
far,
economic
good,
I'm
miss.
not sure what
that's
all about, but I'll tell you what I think and what we see in surveys.
So
and that is,
overall,
up, and
it's because of this bad mamma jam, this fat bet right here on not saying Iran.
Everywhere in countries like the United States had basically the same kind of thing. It was a global inflation coming out of the pandemic, and everywhere people are feeling like they, real wages have been going up in the United States now for 3 years, roughly. But people are not feeling good about it yet, and it will take some years of positive real earning gains for people to feel good again, we think. But you're right. But when you talk to people, they do feel squeezed, and there are areas where prices are still going up, like insurance. Various different kinds of insurance are getting more and more expensive, and that's just catching up really from inflationary pressures that take a while to get to the price, into the price.
Why are so many people saying they're buying
take
calls?
It very seriously.
Buying calls right now is actually
it's a very real thing
retarded.
from the standpoint
Even if
of
you're
what,
right in terms of
what people
direction,
are experiencing,
Vol's going to get crushed,
what
and you're
it
going
does
to
for
lose
us is,
premium value.
makes
So I
us
give
even
you
more committed,
a
if that's
50-50
possible,
chance of the market going
getting
up, but I'm
inflation
saying
back to
if it goes
2% on
up,
a
you're
sustained
still
basis.
losing money.
How does the Fed's independence play into
You
the
see how
ability to
high
address
Vol is? Why the
affordability?
fuck would you buy calls right now?
Well, independence is what allows us to do our jobs.
It's dumb to buy calls right
stable
now.
prices is half of our mandate. It's one of our two mandates, the maximum employment being the other. I mean, look at every advanced economy that looks anything like the United States anywhere in the world, in a market economy, in a democracy, and you'll see, pretty much central bank independence that looks a lot like, in some cases, stronger than what we have. But it's critical that we have that so that we can do the things when we need to do them to preserve price stability.
I mean, they're $5. It's still a scratcher. It's still stupid.
Practice, and I think
if you are right in price direction, you're wrong. You're going to lose Vega. You're going to lose extrinsic value.
Is in Congress, and you see that among Democrats and Republicans in the House and the Senate.
Hi, Chair Powell. Richard Escobedo at CBS News. Thanks for doing this.
How do you trade long direction when you can't buy calls? Sell puts, call debit spreads, go long ES, go long NQ. There's many ways you can express a bullish opinion without buying calls. If you are buying out of the money calls right now, you might be right on the bullish direction, but you are making a tactical error.
Broader inflation.
Yeah, I'm not going to give you an example or a specific answer on the first question. We're prepared to do what needs to be done, but I wouldn't want to hypothesize about what that might be. In terms of diesel prices. So your question there is, are we concerned about it? I mean,
how concerned, and whether or not it will drive up, the cost of food and other goods that really rely on it to
So
move
I think
across the
it's
country.
a more general concern than that. It's diesel prices.
But
because
also in
that's-
this case,
that's
you're wrong on
transportation
direction
of food
as
and
well.
things like that. There are just lots of ways that oil and derivatives of oil get into the production and transportation of many, many things. So, and those, there are big effects in headline inflation, but things like that leak into core.
Out of the money puts are losing. Out of the money puts are losing money. Also, no, they're not.
They're material.
If you bought them at the exact bottom, they might have been, but generically, any other time besides like 10 minutes ago, they are up. VIX is expanding. Of course, they're gaining value.
Something that really makes a big imprint on the U.S. economy. We're just going to have to wait and see.
Thank you.
Buying calls right now is perfect because rockets to all-day highs. No, it's actually, you're
Thanks very
retarded
much.
if you're buying
Just to
calls
sort of
right now.
Stare into the future for a little bit. I was looking at the longer run bits of the SEP and noticed that the growth estimate had been revised up a good chunk from 1.8 to 2, and the kind of long-term Fed funds rate as well. It'd be great just to hear, is that AI productivity or what's going on there exactly?
Please say AI.
Yeah, I think it's just productivity. We actually started
No,
seeing
say it.
meaningfully higher
Oh, he said it.
productivity some years ago. ago, four years ago,
But
5
I need
years
him
ago.
to say beige book.
And
So he did say it, dude.
And that's
We're
not
climbing
because
up.
of generative AI.
Come on,
It
beige
may-
book.
we won't know for years what it's really due to, but it could be due to the kind of things that people did during the pandemic to economize.
Did he just randomly say
and somehow
central
become
bank
more
out of
productive
nowhere?
Because there was an incredible labor shortage, but I think economic forecasters are very skeptical of periods of high productivity because
People
they're so
buying
rare,
options
and
blind.
they're
Yeah,
often
that's why
revised
a
away.
lot of traders
And
lose money
for
because
many
they
of
don't
us
know what the
I
fuck
never
they're
thought
doing.
I'd see this many years of really high productivity, and by the way, expect it to continue. And we haven't really
He said
started to see
dummies.
the effects of
The people buying calls are the same
generative
people
AI.
that bought a
And that
$6,000
should-
trend
that should
line
certainly
course.
contribute to that. So it's quite unusual, and it's this is the higher productivity is the thing that allows incomes to rise over time, and so it's a great thing. Was that your question?
Yeah, no, I was just curious what lay behind that. And just briefly on
Oh,
that as well
fuck
to
you.
finish up.
Order filled.
You hear the argument a lot, this is sort of
Free
disinflationary story.
trade.
If you believe that productivity thing, that should also weigh down inflation over time, maybe then kind of pull down where rates end up. Do you kind of agree with that line of thinking, or would you think...
And if I bought calls, I'd be poor like all of
I
you.
think you have to be cautious about that, in particular if you're talking about AI,
That
about
sucks.
generative AI. So
R.I.P. to
remember,
everyone
in
who
the short
fucking
term,
dipshit
what's happening
bought
is
calls.
we're building data centers everywhere.
That
And
sucks.
it's actually putting pressure on all kinds of goods and services
the
that go
fuck
into
are
building
people
these
buying
things.
calls
So that's
right now?
actually
How
probably
dumb
pushing
do you
inflation
have
up
to
at the
be?
margin. In addition, it probably raises the neutral rate. So in the near term, you're
Money
looking
gun.
at you're not
All
looking
right,
at something
that's a
that would
low blow.
immediately call for lower
That's
rates
a low
or
blow.
that would be lowering inflation.
You know my
Over
money
time,
guns,
though,
bro.
Sure, it can
know
be
it.
if it's expanding potential output, which is what higher productivity does, then it actually can be. But I think it's an empirical question because it's really is the demand growing faster or slower than the supply side, and I think we just don't know that answer ex ante.
You trade
going
on a
in.
funded account? Yeah.
We'll just have to wait and see.
And I get
Thank you very
real
much.
payouts? Thank you very much. Guys, I just got completely destroyed in comments here. Justin says, you trade on a funded account, LOL. Well, that sucks because I guess all these options gains, I guess the $1,000 gain on that options account, I guess the $1,250 gain on that account, I guess the 2,000 gain there. I guess all these option gains are nothing, but then I'll give it to them. Obviously, all those gains on my options account, they don't count. But you know what also doesn't count? The $9,000 payout on the funded account, the $6,000 payout. Also, it probably doesn't count that $9,000 payout. That $6,000 payout, none of those count. So the options don't count, the funded account gains don't count. The $650 payout on Jerome Powell not saying the word Iran, that doesn't count. He got me. Justin's right, folks. I guess, yeah. So the options don't count. The funded futures don't count. The call sheets don't count. I don't know what to do. I just don't. Yeah, the $1 million pending payout I have from, that account. That's a nice growth there. The $1 million payout from Apex that I have pending. Obviously, whenever I try to spend that money, everyone's going to know that it's from a funded account. And it doesn't count. Then they're going to be like, sorry, we thought this $1 million was from a job. We didn't realize this was from a funded account. So they're probably not going to take the $1 million. I don't know what to do. LMAO, funded account trader expert. I guarantee you, I know more about trading than you. I guarantee you my funded and my personally funded accounts are doing better than yours. On any measurable thing we could possibly compare right now in the market, I would bet every single dollar of my net worth I am better off than you. Every single one. Anyone profitable trades their own money. I do trade my own money. Anyone with a functioning brainstem would trade both because it's more money. Imagine being as fucking stupid as this person to be like, I am so good. I am so smart at trading. I only trade my own capital. If you're good, you trade your own capital and other people's capital to make even more money. But yeah, no, you're right. I forgot. Only the really, really good people trade their own because they're so good. That makes sense. That I never thought about it that way. I never thought about it that way, but I think you might be onto something. This guy takes rage bait like a boomer. No, you were trying to say something serious until I just absolutely destroyed you. You thought you were actually saying something impressive until I showed you proof that I'm far better than you could ever be. And now you're trying to pivot it, running like away. You're hiding under your mom's skirt. Your tail's in between your legs here. Because you're like, oh, wow, that actually does make sense. Congrats on being fucking stupid. I guess congrats to you on that. I'm gonna have to really think about how this day went for me. I'm just probably gonna cry in a shower later. I'm just gonna take a bath tonight, and I'm just gonna sit there and weep like an old lady. I'm just gonna weep myself to sleep with all these dollars. I don't know what to do. If it was your own money, you would have been paid out by now. But I am still trading my own money. And actually, those accounts still have the money in it. And that's just like a game of percentage gains. But if you're good at something, of course, you would want to leverage it as much as you possibly can. There's no rules here. You're allowed to, obviously, there's no rules against trading your own funded account and also extra accounts. You could trade sim to fund capital because you're allowed to go live with them. And, oh, wow, look at that. I'm making even more money now. Who would have thunk? Who would have thunk that one, Batman? But no, obviously, if you're good at something, you can leverage it as much as you want.
Order submitted.
But show your portfolio, big guy. I literally do all the time. Every single day, I post all of my options trades. Every single day, I post all of my futures trades. I'm probably one of the most transparent people in this entire game. So this kind of just shows us that you're new to the show, which not only explains your retardation, but you literally don't know what you're talking about because every single day, my option trades are posted. Proof of entries, proof of exits. Every single day, the finalized results of my futures trading. I don't post all the entries and exits on futures because I trade a lot and that would get annoying. Options trading, I trade a bit less, so it's actually literally easier to show the exact entry time and the exact exit time. So in terms of proof, like not only do I show common like monthly updates of where my portfolio is at, I actually do one better. I show you every single day, all entries, all exits, all out there. So welcome to the show and proving that you're a fucking dipshit. That must be exciting for you. Hey, that must be a thing for you. What time is it? All right, we're going to lock in at 700. We're going out.
Order
We're going out swinging at the $100 value so I can basically call it a day. Why are you even explaining yourself to the internet D-bag? Because I'm not trying to convince him or switch his mind. Obviously, retarded people are retarded and you can't help them. But there is probably another listener who's maybe new, trying to figure out what's going on, trying to figure out like, hey, is this another bullshit marketing scam artist versus like a real trader? And I can understand, especially from how I look right now and my antics on today's show, of how that might come into question. So it's not really like I'm completely eviscerating this guy, not to switch his mind, but to set the record straight for the other people who might be listening. So it's just that's what we're doing there. I could give two fucks about that person. I mean, I would bet any amount of money he's losing all of his money trading, and there's probably no amount of education or mentorship or advice that I could possibly give him to make him profitable in this game, because some people just don't have what it takes to be a trader. And hey, whatever. We need other people in this world. There's other jobs. Trading isn't the only job. So you could just tell with people like that don't have the ability to think for 2 seconds that they're not going to be they're the same people who spend $6,500 on a trend line course. It's the same people. I might disagree with Matt's strategies. However, this is the most knowledge I've seen from free internet, and the Discord is even better. That's funny. It's like, I hate Matt, but some of his stuff is actually pretty decent. I like that. That's he probably bet on Iran. Yeah, dude, I get it. I understand that when I come in here I rewind the tape. I said it's a lock. I said it's a can't miss MK guarantee. I said it was the lock of the century, and people faded that bet. They're like, nope, Powell's going to say Iran, but I told you folks, I had the insider information on it. I had that insider information on it, and you guys still didn't believe me. You guys still did not believe me on saying Iran, and you guys faded it, and that's probably why he's pissed. You know, he's probably real pissed about that one. But hey, what's the saying? You can lead a horse to water, but you can't teach a retard how to trade. Is that the saying? It's something along those lines, and I think that pretty much applies to this exact situation. There's actually a lot of buyers at 709, oddly enough. And that's where we're at. That is exactly where we're at. I believe you, Matt. I believe you, Lobo No X. I think that's how you say your name. Well, I'm hoping to lock this trade in so we could actually end the show. I'm going to dedicate this particular win to that dipshit, which I think he got banned. I wish I could make money like Matt. I lost everything on 0DTs for 3 years straight. Almost all of them were on puts. Yeah, don't play 0DTs. If you are going to play 0DTs, play 0DT premium selling. I have never met I've been in this game now. Well, I've been actively trading for over a decade, but I've been in the content game with a larger reach of people since 2021. And I've literally interacted with hundreds of thousands, like multiple six figures amount of retail traders. I have not met one single person who is net profitable over a multi-year time frame playing long 0DTE calls or long 0DTE puts. I'm not saying you can't be profitable playing 0DTEs, but the people I've met who are profitable playing 0DTEs, they're doing it by selling premium. They sell calls, they sell puts, or they do call credit spreads, or they do put credit spreads. I have not met a single not one. There's no counter example to this statement. I have not met a single person who is net profitable buying 0DTE calls or buying 0DTE puts. Of course, you could find examples of singular trades, of singular weeks, of singular months, maybe even of singular quarters where they are net ahead, but you will not find a person who is doing that in excess of a year. That person does not exist. It doesn't exist. But you could be like, but what about my favorite influencer? They say they're profitable, but what about my brother's dog's cousin's sandwich maker's dog walker's friend? And he went to the movie once, and it was the guy at the Brisk, and then we also kind of hung out at the Hanukkah party. That guy said he's net profitable. Yeah, I bet he is. I bet he fucking is. He's not. Folks, I have not met a single person with a multi-year track record who all they do is buy 0DTE calls or 0DTE puts. That it might exist, but also maybe Blake Lively is going to show up in your apartment naked one of these days. Maybe. Yeah, maybe that girl you were talking to actually was just busy all of Friday and Saturday, and that's why she didn't return your text. That's probably what happened, yeah. No. She was probably just busy. The odds of them being just busy and can't respond to your text are the same odds as that mentor who's charging you thousands of dollars. And they can't show you their track record because their dog ate their brokerage statement. That's why. But you trust them, bro. That makes sense. Their dog ate their brokerage statements. Good luck with that one. Good fucking luck with that one. Do you also do 0DT spreads? Yeah, that's pretty much all of my options trading. Sometimes I'll swing trade options. Since December, the environment hasn't been good, so my bot hasn't fired to swing trade. But I've been selling a lot of premium. So you just buy shares, not options? No, you can sell options. You can create a position by selling options. Instead of buy to open, it's sell to open. Instead of BTO, it's STO. You can sell calls and sell puts to open a position, and then you would buy them back to close the position. It's opposite. And a lot of people think that the only way to trade options is to buy calls or buy puts, but you can literally do the opposite. You can, weeklies, that's fine. You could sell them 0DT. You could sell them weeklies, monthlies. You could sell as much as you want. James does 0DTE option trades and has like a 94% win rate, just daily in and out trades. Super dog. Oh yeah, I bet he's hot. I bet that's real. Yeah, that sounds right. A 94% win rate going long calls and puts. Yeah, I'm gonna file that in the drawer of things I absolutely, truly fucking believe. That makes sense. Do you realize that if you had a 94% win rate going long calls and puts, you'd be a billionaire within like a month? Starting with like $10. That's the dumbest. The fact that people believe that. How are people so fucking gullible that they believe this shit? Like, what? Were you guys all dropped as children? Did your mom bash your fucking head in when you were an infant? Like, holy shit. Yeah, 94. You should sign up for my trendline course. I have 110% win rate. That's no. I actually have 110% win rate. Actually, whenever I trade, they just automatically deposit money into my account because of that extra 10%. The Tylenol hits hard. Yeah, like you guys need to get off the tea bottle here. Jesus Christ. Yeah, made $1 million last week. Statement include. I'm sure he did. Oh, you saw statements online? Oh, that's proof. Well, gosh darn it. Never before has someone been caught faking statements. Never before has someone ever been caught doctoring statements. I must have been fucking dreaming that one. Never before has someone been caught taking opposite trades in two accounts and then just showing off the one that works. It's real. It's on, folks, it's on the fucking internet. It must be real. I never thought of it that way. Well, I guess because he says it has to be real. It's real. He sent you the pictures. Hell yeah, dude. That's all the proof I need. Take my money. Take my money. What makes more sense to you? A person who allegedly is making millions of dollars a week trading, and they're just giving away the secrets because of how good their heart feels about it. That makes sense. Because they totally just wouldn't be consumed by Jane Street or Citadel and get like a $50 million a year paycheck guaranteed. No, I bet they're on the internet. I bet they're fucking pushing for ads and like dealing with all of your bullshit. That makes sense to me. They're that makes sense. I want to sign up with you. I need to be in this trading chat room with you. All I need is if Stone Cold says so. Stone Cold Austin. Honestly, if Stone Cold Austin somehow supported a particular trading influencer, I'd probably believe it too. I would. Yeah. I mean, at that point, Stone Cold wouldn't partner with anyone who's suspect. That just doesn't make sense. He wouldn't do that. Man, people are so fucking gullible. And they're also fucking simps. not only do they fall for the dumbest shit in this particular industry, they fall for the dumbest shit in this industry times 10 if it's a girl saying it. Like, I thought we were done with this simping bullshit. As dumb as this whole like red pill toxic masculinity like wave went, I thought like maybe the one good thing is like simping on the internet would somehow just like die out, but it's still here. Like there's always just like a fucking simp, and it blows my mind. It blows my mind. I feel like I should almost get like breast implants or something just to take my business to the next level. Fucking insane. Like it's not even rising at a linear level of like, oh, it's a woman, oh, it's trading. So two, I guess, things where people lose any form of logic. It rises at an exponential rate. When it comes to the world of retail education and trading, people are already like really, really stupid. And then when you slap a girl on your thumbnail, holy shit, dude. It like at an exponential rate. People are like, take my money. Take my money now. They almost like get mad that like they can't at a more rapid pace take their money. Oh, brother. Oh, brother. Oh, brother. Oh, brother. And I just want to be clear. I am talking about no female or influencer in general, and you should be giving them all of their money. Like, you should sign up for their course maybe even 3 times just to be sure. So I want to go on record. No specific female and really no specific influencer. I think, especially if you're underage, you should probably go find your mom's credit card, like right now, and sign up for as many meme coin trading courses as you possibly can. In fact, your odds of success are going to be increasing the more accounts you buy with your mom's credit card. Are buyers still there at the random ass levels? Yeah, they're at 709.5 for some reason. There is a wall of buyers right here at 709.5, and I don't get why, but they're crazy. They probably bought a good trendline course, you know? They're fucking with our minds. I like it. I appreciate the game theory. They probably just bought a really good trendline course. For example, the Twitch streamer Amaranth makes a living off her simps. She definitely does. Oddly enough, though, she's a very shrewd businesswoman. I think she makes $80,000 a month off her dividend portfolio. She has invested a lot in the stock market. She owns a lot of other businesses. I think she owns like gas stations and stuff. So as much as she makes money off of simps, the ability at which she has grown the money that she has made off of simps, honestly, is highly impressive. I'm not saying that facetious. Like, legitimately, she is a very good businesswoman. Like, more than just like the simp army type of things. I'm saying like what she has done in business and what she has done in stock market and what she has done in real estate, which I guess they kind of all overlap at a certain degree, is like legitimately impressive. Can't say that though for all these women with simp armies, and I'm honestly complaining. I wish I had a simp army. The people who support me, the last thing they do is defend me on the internet, dude. All these simp armies, I love the way they defend the creator that they give money to, dude. My most loyal followers are probably the people talking the most shit on me. I have somehow cultivated the audience that's the exact opposite. Dude, if you ever want to see someone talk shit on me daily, go look at what Trex is saying. Trex is a hardcore supporter of the Goonie community. He's been here forever. He's like one of the few people that I can bet on him being one of the first comments per stream. And yet per day, if you want to see someone talk shit on me, just go look at Trex. I literally have the opposite of a simp following. My followers like actively talk shit on me. They make fun of me. There's an entire account called Fat Kohrs. Just whenever I look a little extra fat, they take screenshots of it and post it on the internet. I don't know what I have possibly done to do it, but I've created the inverse of a simp. I've created a very mean, offensive to me following. But I guess 'tis my burden to bear. 'Tis my burden Boobs guarantee has $100K per year salary. Well, at least I guess the trade-off as a guy is at least I can bench over 100 pounds. You reap what you sow. Well,
order filled.
I guess I fucking reaped that, brother. I made a lot of money. You could add it up if you want. There's my money on the day. 6K on those accounts, 3.5K on those accounts, 3.4K on those accounts, and 300 on those accounts. I'm done. No more trend lines for me to draw. Now it's time for me to sling 0 DTE calls and puts because that's where you make money. That's where you make money. I'm just going to buy calls when the VIX is at a super high level because that's a smart move. Nice 1-to-1 RR, haha, what garbage. What? How is it 1-to-1? Wait, what? Nice 1-to-1 risk to reward. How was it 1-to-1? My stop was at break even. I was short at 900. I was short all the way up here. Dude, that has to be right. That's rage bait, right? Dude, I made 170 points off of one trade, and you're saying it's a 1-to-1 risk to reward? Who follows this clown? Yeah. Be a real shame to anyone who followed these trades today. I bet they're fucking punching the air right now. Yes, yes, yes. Are you have to be fucking with me, right? Like, what? Wait, do you have a screwdriver in your head? Yeah, just in case. Where's that? Just in case we need to do something with it. Fucking what? Oh, I fucking hate the internet. But I love it. I'm addicted to it. I love it. I love it. I love it. I love it. I hate how much I love it is what I'm really trying to say. And I hate how much I love it, and I love how much I hate it. It's in one of those situations. Well, anyway, if any of you want to be my MySpace top 8, feel free to friend me, and I'll check out your page. And if you have some really cool HTML and CSS, and if I dig your song, I am willing to switch a couple people out and put you in my top 8. So I'm currently taking an application for 3, and if you can really convince me, I'm willing to switch out my entire top 4 for anyone who can convince me I should do so. So just throwing that out there. Tom from MySpace. Me. Oh, I love it. Well, folks, that's what I have for you today. My books fell. How could they? That's actually a really good book. Pipple, what's his name? Marty Schwartz or something? Marty, I think his nickname was Buzzy. He was a futures trader back in the day, and he has some pretty fucking savage stories. That's actually a really good book, that orange book on the end there. It's called either Pipple or The Pipple of Wall Street. But for my readers in the audience, if you're looking for something a little bit extra, that's a book I don't think we've talked about. I read that at the Grand Canyon instead of paying attention to the Grand Canyon. That's just a little bit about me that has nothing to do with today's show, but hey, might as well share it with all of you. Any hoozles, that's what I have for you. I hope you made a shitload of money today. If not, there's always tomorrow. We're streaming 9 a.m. tomorrow. We will post content later today. If you want to sign up for Lucid or Apex, use code Goonie. The MySpace positions are open if you want to be in the top 8. And you're so broke. I think you mean you're with like an RE. Like you are so broke. That's the wrong you're there. So don't fuck up your grammar. Come on, man. It's embarrassing. Use his code. Ha ha ha. Broke man. I'm broke. Use my discount code. I don't think I'm broke. I would like to have more money. You prop traders are all a joke. I guess it is funny to get that much money for such a low initial investment. So I agree with that. It is a form of comedy to be able to invest such a little bit of your own capital and turn it into such a big return. I do admit that is a form of comedy, so I have to agree with you on that one. Anyway, videos coming out today. Make sure your notifications are on. We're streaming once again tomorrow morning, 9 a.m. bright and early. And other than that, I hope you absolutely crush today and whatever you plan on doing tonight. Peace.